Welcome to the Deep Dive, where we dig into the details that matter to you. Today, we're diving into Sony Group.
And it looks like we've got a lot to cover. Company profiles, financial reports, even some research on robotics.
Yeah, somebody wants to know if Sony stock is a good investment.
Good question. Where should we start? Well, maybe a quick history. Sony's been around since 1946. It started as Tokyo Sushin Kogyo.
Not exactly a household name.
No, not really, but they became Sony. A name meant to, capture that youthful energy.
Makes sense for a consumer electronics company.
Yeah, and they really were pioneers. Transistor radios.
The Walkman, the CD player. I mean, Sony was the Apple of its day.
Absolutely.
But it hasn't always been smooth sailing, right? I mean, what about Betamax?
Ah, yes. The format wars of the 80s. VHS won that round.
And they've had other ventures that, well, didn't quite work out.
That's true. But more recently, they've been streamlining, focusing on core strengths like electronics, gaming, entertainment.
And in 2021, they restructured, right? Became a holding company. Sony Group.
Exactly. With subsidiaries like Sony Corporation, that's for electronics, and Sony Interactive Entertainment for gaming.
Probably a smart move considering they were losing money in some areas.
Yeah, like their mobile phone division lost nearly $1 billion in 1 year.
Ouch.
But on the other hand, Sony has a lot of cash on hand.
Almost 900 billion yen back in 2012.
Right. That gives them some breathing room. They can weather economic storms and invest in new tech.
So how's their financial performance looking now?
Well, 2022 revenue was over 11.5 trillion yen.
Sounds like a lot.
It is. And the restructuring seems to be working. Profitability is up. But remember, Sony's huge and diversified.
Electronics, gaming, music, movies, even financial services.
It's a real mix.
Which is probably a good thing, right?
Yeah.
If one area struggles, another can pick up the slack.
Exactly. It balances things out.
Okay, let's talk innovation. It's not all PlayStations, right?
No, not at all. They're doing some really interesting stuff.
Like what?
Well, they're a leader in CMOS image sensors. Those are used in everything. Smartphones, cameras, you name it.
And they're working on AI-powered intelligent vision sensors.
Right. Those could revolutionize how machines see.
Hi.
And then there's their robotics research.
Robotics?
Yeah. They presented their passive transformable Omniball wheel at a conference this year.
What's that? Some kind of futuristic tire?
Basically, yeah, it can change shape to adapt to different terrain.
Wow. So lots of potential applications there. Disaster relief, exploration.
Even more agile robots.
Okay, so they're doing a lot. But what about their stock? Is it a good buy?
Well, to answer that, you need to look at things like the price-sales ratio.
What does that tell us?
It shows how much investors are willing to pay for each dollar of sales. And then there's the earnings yield. That gives you an idea of your potential return on investment.
And analysts have price targets too, right?
Yeah, they give us a range of possible outcomes for the stock price.
So lots to consider.
There is. And on top of all that, they've been making acquisitions.
Acquisitions, like what?
Well, back in 2015, they bought Toshiba's image sensor business, solidified their position in that market.
And then they merged their mobile, TV, and camera businesses in 2019.
Trying to be more efficient, create some synergy.
And more recently, they've invested heavily in anime. Bought Crunchyroll in 2020 and then merged it with Funimation the following year.
That's a growing market, globally popular, so it makes sense strategically.
Okay, let's break this down. What are the pros and cons of owning Sony stock?
All right, well, the pros are pretty clear. They've got a diverse portfolio, a globally recognized brand.
And a history of innovation. Plus, they're putting a lot of money into R&D.
Right. And they're expanding in key areas, image sensors, anime. Those have huge growth potential.
But what about the downsides?
Well, the competition's fierce. You've got Apple, Samsung, Microsoft, all giants.
And like we said, some of their businesses have struggled.
Yeah. And like with any stock, the price can be unpredictable.
Let's talk about dividends and share buybacks. Do they do either?
They do. Sony pays a dividend twice a year. And it's grown a lot recently, over 116% in 2024 alone.
Wow.
And they have a history of share buybacks, too.
So that's good for investors. What about ESG factors?
Their environmental record is a bit mixed, to be honest.
How so?
Well, they're trying to reduce their footprint, developing things like sugar-based bio-batteries.
Which is great.
Yeah, but they've also been criticized by groups like Greenpeace.
So it's a mixed bag.
It is. But on the social side, they've got good initiatives, supporting education and community projects around the world.
Okay, so we've covered a lot. History, financials, innovation, even ESG factors. But the big question remains, is Sony stock right for you?
That's the million-dollar question, isn't it? And honestly, it depends on you, your goals, your risk tolerance, what are you looking for in an investment,
Right.
long-term growth, short-term gains, stability.
And how much risk are you comfortable with?
Exactly. We've given you the information, the tools. Now you have to do some thinking. Does Sony align with your investment strategy?
And that's something only you can decide.
Exactly. No one else can answer that question for you. Do your own research. Think about your goals, and then make the decision that's right for you.
Well put.
Welcome back to the deep dive. So, we've talked about Sony as a company, but what about their impact on the bigger picture, the global economy?
Yeah, they're a multinational corporation. Lots of moving parts, lots of influence.
For sure. I mean, just think about jobs. They employ over 113,000 people worldwide.
That's a lot of paychecks,
Yeah.
a lot of economic activity.
And that's just direct employment. You've also got the indirect impact, their whole supply chain.
Manufacturing,
Yeah.
distribution, sales, all those people contribute too.
Exactly. It's a ripple effect. And their manufacturing operations are spread out too, different countries.
So they're contributing to local economies all over the place.
Absolutely. But it goes beyond just jobs and manufacturing. What about R&D, research and development?
Sony's always been known for innovation.
And that innovation often spills over into other industries. Benefits everyone, really.
Like their lithium-ion battery. That was a game changer, not just for electronics.
Right. Electric vehicles, renewable energy, they all rely on that technology.
So one company's innovation can have a huge impact.
It really can.
Mm.
And then, of course, there's international trade. Sony's a major player, importing and exporting all over the world.
Generating revenue, strengthening ties between countries.
Right. And their entertainment division is a big part of that.
Movies, music, video games, reaching a global audience.
It's cultural exchange on a massive scale, helps promote understanding and appreciation between different cultures.
But it's not all sunshine and roses, is it?
Yeah.
I mean, there are concerns about big corporations and their influence.
Oh, absolutely. Labor practices, environmental impact, tax avoidance, those are all legitimate issues.
Things investors need to think about. It's not just about profits.
No, it's not. We have to consider the ethical and sustainable side of things, too. And that brings us to the final part of our deep dive.
Where we'll try to answer the big question, is Sony stock a good fit for your portfolio? All right, welcome back to the deep dive. So we've talked about Sony's history, their financials, their global reach. We even touched on their ESG record.
A lot to unpack, for sure.
But now, the big question, the one you came here for, is Sony stock right for you?
Well, as we've seen, it's complicated. There's no one-size-fits-all answer.
Depends on your goals, right?
Yeah.
Your risk tolerance.
Exactly. But let's recap, just to make sure we're all on the same page. What are some of the things that make Sony attractive to investors?
Well, they're diversified, not tied to just one product or market.
Right, more stability. And their brand is strong, globally recognized.
And they're innovators.
Yeah.
Always pushing the boundaries, like with those image sensors, the robotics research we talked about.
They're not afraid to invest in the future. And that anime acquisition could be a smart move. Anime's huge.
And they're willing to adapt, restructure when they need to. That's a good sign.
Absolutely. Shows they're not stuck in their ways.
And for income investors, the dividend's attractive. Grown a lot recently. Plus, they buy back shares.
All good things. But of course, there are downsides too.
Right. Can't ignore those. Competition's tough in their industry.
Some of their businesses have struggled. Mobile phones, for example.
And the stock price can be volatile. Like any stock, really. It's not a guaranteed win.
And their environmental record? Well, it's a work in progress. Something to keep in mind if you're an ethical investor.
Okay, so, big picture. What's the takeaway here?
We've given you the information, the good, the bad, the in-between.
We've explored the opportunities, the risks.
Now it's up to you to decide. Does Sony fit your investment strategy? Your goals?
No one else can answer that for you. It's a personal decision.
Do your own research. Dig deeper into the things that matter to you.
Think about your time horizon, your risk tolerance. What are you hoping to achieve?
And then make an informed decision, one that you're comfortable with.
Well said. And on that note, we're wrapping up our deep dive into Sony Group. Hope you found it helpful.
If you want us to take a deep dive into something else, let us know.
Yeah, head over to our YouTube channel. Leave a comment. Tell us what you're interested in.
We're always looking for new ideas, new companies to explore.
Thanks for joining us on the deep dive. Keep learning, keep exploring, and until next time, happy investing.